Hello everyone, hope you guys all had a good week. So it's Sunday. On Sunday I normally, grab a cup of coffee late afternoon as I am doing right now. And what I like to do is to see how the week went. So we're going to wrap up the week and then I'm going to look at what's going to happen next week for us. Now, for all of us at the Global Trader Club, globaltrader.club, we already know the swing days and the swing hours for the whole month of March. As you know, I posted the whole month of March on, I think, the 21st or the 22nd of February, something like that. And I'm about to finish April as well. So as you can see, I've got my big mother of all books, okay, my notebook. I've finished up to Friday the 18th of April, so I've got 2 more weeks to do, and then I'm going to post the whole swing days and the swing hours for every day, probably around the 20th, 21st of March again. So that will kind of like keep us in motion. So from week to week, day to day, week to week, month to month, we're kind of like progressing with the hours and the days. Obviously, knowing the swing hours and the swing days in advance is really a blessing. And it is really minimum risk, maximum return way to trade. Now let's take a look at the week and see how it all panned out. I want to start with Bitcoin because it's still open. And the swing days for Bitcoin were Monday, Wednesday, and Saturday. Now this is Monday, as you can see. Now with Monday, obviously, when the market opened, it was down here. So what we're looking for is obviously a reversal as the market is coming down, as you can see, right? But we want to look for a reversal at a price, okay? We don't want to just blindly go in. And also we want to match it to a swing hour. So if I have a price, if I have a swing day and a swing hour, then I'm looking to reverse from the lows, okay? And this is pretty much for us here, as you can see, we had a price on the weekly of 28,688, which was actually, if I get to the 28,688, 688 is pretty much there. Okay, so it's pretty much there, 28,688 plus we had this blue line here, 41, 79,874. 79,874. So this was the zone, all right? And you can see Monday, the market came in, and the market pretty much stopped slightly earlier, but this was a zone. So this is a trading hour, okay? Now on Tuesday, it made a slightly lower low, coming into 76,759. But if you're using your ATM, it's not a surprise. You can see why, okay? Because your, like levels are there. Whenever you got your blue lines, your levels are there. So you want to make sure you're checking. Now this is a new setup. This setup happened when Friday closed. But normally what we have is always some kind of a target to come down to. In fact, this month we still have 56, as you can see there, which is a price of 74,503. Okay, so the market can still come down. But the important thing is, once you've made weekly targets here, it's very, very important to understand that this could be like a reversal point for us. And because our swing days are for within the week, when I say swing days, there was a comment the other day, rightfully so. One of the guys said your swing days is just like too close to each other. It's not like, it's not like a swing trade. You're absolutely right. And the reason is that what we're looking for are swing days because we're day traders. We want to see when we can catch a high to sell and a low to buy. So within that week, we're looking for specific swing days. What swing day basically is a day where the market's going to turn or we're going to have a good day. All right, so it should be like a good day, or we're like kind of catching the turn from the lows or the ups, okay? But for a bigger time frame of swing days, like for example, if you want to take a swing day from, I don't know, here, if you take a look at Bitcoin, right? You see here, what we do with the swing days is we're always like kind of matching it to our technical analysis. So any swing day you want to match to on a long-term basis, it requires a few more calculations and it needs to match our bigger time frame pricing, like on the weekly and the daily and also a technical level where you can see like on the chart as well. All right, so for example, if I was doing this, okay, so if I was doing, this is a low, this is the low and the high. All right, so anytime, okay, which actually you could do if you watch my previous videos as well, because this is where the market broke out. So every time we're down here on a swing day, we'd be buyers. Why? Because it's down here, but you can't see me, you can't see it, sorry. Let's just move me down. Okay, like here, right? So this is a place where you'd like to buy because that's where the breakout happens. So every time it comes down and you've got a swing day, you're a buyer at this zone. Then you can keep it on for a few days, or you can keep it until the next swing day. Okay, same here. Look, we're dipping down, we're dipping down, we're dipping down. So these are like longer term swings. Okay, why? Because we're at a price level. Same here. Look, the market has a resistance there. Look at the swing days here. See, they're just ready for selling the highs. Okay, so on these days we're like looking to sell the highs, and once the market breaks down, then you just got, then you're coming all the way down here. Okay, once again, look, this is a swing day, taps right into that green zone, goes up, and I've got 2 swing days in a row here. Okay, so you got a high, and then the next day they sell it off. Okay, and when you're in between levels, then obviously you've got to be really careful, because otherwise you could get chopped out. So this is why matching a swing day, a swing hour, and your technical pricing is like bingo trade. It's like really quality trade. Okay, so I just want to clarify that, because that was a good question in the comments. Okay, so what we want to do, we had Monday, Wednesday, and Saturday, right? So Monday market dips down. Tuesday it makes PST level down here slightly maybe, and then it just pushes up again into Wednesday. Now look at Wednesday, it makes a high. Thursday, boom, comes down. Okay, now the next swing day was Friday, Saturday, sorry. As you can see here, I had Monday, Wednesday, Saturday. So Saturday it made a high, and Sunday kind of like going down. So what you really need to do is just, all you have to do, as you can see, and these are hours, look, if you're selling and buying. So on Wednesday, if anybody wants to sell the high, then that's where you're selling. If Wednesday is a swing high, then Thursday you can wait for the next day, right? Thursday you sell on the swing hours, sell on the swing hours. So if there's a retracement, you can sell on a swing hour as well. As long as the market is high and you want to sell it, great, just push it down. This is Thursday swing hour. As you can see here, market making again target and going all the way back into Friday, and Saturday being a swing hour, a swing day, sorry. As you can see, it's just from here. Why is that 84,565? Because I'll tell you why. That's that there. Okay, 46, 39, 84,568. That's your target there. So the market's kind of like made it, as you can see, on Saturday, and now we're kind of like sizzling down. Look at that trading hour. This I just looked today as I was doing the video. I said, let me put a few hours here for Sunday as well, because normally I don't do the weekend trading hours. Okay, as you can see, all the hours here I've got until Friday. But if you know how to time the market, then it's not a big deal. You can, once you've learned it, you can do your own timing. I just actually slapped these on by just looking at my own stuff, calculations, and that was like in a matter of 10 minutes, 15 minutes. Okay, so that's that. All right, so next week, obviously, it's going to be a different ball game. But next week, anybody who's in the club, they can take a look at it and they can see how the swing hours are going. Why is that important? Because if I'm in a buy or sell trade, it doesn't really matter. If I'm in a position, right, if I'm buying and the next swing day is on a Wednesday, I obviously don't want to be like keeping this up and running all over the place. I want to take it into Wednesday and then, kind of like push down and, trade in a way that when my stop loss is tight. Because if I got the hours as well, all right, so let's say That's your Wednesday. Okay, Wednesday market makes a swing high and it crashes down. You can see Thursday it didn't go any higher, because if the swing day is right, that should be it. Sometimes they stop sweep. It does happen sometimes, but it still should be a point of return for us. And if you trade it on a swing hour from the highs, because we went up into Wednesday, so it won't like come down, on Thursday you'll be like selling the trading hours from the highs, or accordingly to your technical analysis. It doesn't matter, like I said, like whatever technical analysis you're doing, whether you're doing swing trading, I don't know, whether you're doing retracements and breakouts and price formations, demand and supply, I don't know, wave analysis, whatever technical analysis you do, it doesn't matter. Really, if you match your analysis to time and just trade that, you're just going to feel like, wait a minute, that's just like great, because it just doubles up on the confirmation. And if you're wrong, you don't want to be in that trade anyway, so the stop losses are like really crazy tight. Okay, and that's Thursday again, market going up. So as you can see, we can follow, by knowing the swing days and the swing hours in advance, we're like following the rhythm of the market. You're like in touch with it all the time. Let's take a look at NASDAQ. Let's go backwards. Take a look at NASDAQ and see how that panned out. As some of you know already, I'm now trying to take it to our fintech level, so we can actually have our software developed and integrated into like one kind of system. So this is why now I'm coming out on YouTube. Before, I wasn't doing much on YouTube. It was just a club members area, but we've been doing this for years, and with all the manual calculations, it works. So now we're going into the software phase and really want to take the opportunity to kind of like grow it into that fintech phase. Now let's take a look at NASDAQ. So on NASDAQ I said Tuesday, so that was the only day for NASDAQ, right? So let's take a look what happened on Tuesday. It's the weekly. Okay, and this is your Tuesday. Now Tuesday, let's make this a little tighter so you can see better. See, Tuesday was the low of the week. Okay, so now I've got a Tuesday, market makes a low. So on Thursday, they buy again. Okay, when did they buy? Let's check it out on Thursday. Oh, look, and I've also drawn that green rectangle box. Let me tighten this up a little bit. Okay. So I did say to everybody, if it does come down, you can check the videos as well. If it comes down into this zone, all right, this is a buy zone for us. And if it comes at the right time, obviously, right, we're looking for price and time together, right? So market comes down, it's a trading hour, it's a price zone, that's it. And then the market just goes all the way up into Friday, targeting 19,646. Where did I get that from? Let's take a look. 19,646. I would have had that for sure. 19,475. 19,475 would have been up there. Okay, so this is one target we definitely would have had, because 19,475 for us would have been like a resistance zone. But remember, on Friday I didn't have any hours except London pre-trade and New York closing, so the market goes all the way up in there. Okay, right there. So nice and easy. Okay, so obviously I had 19,646 from somewhere. Maybe I drew a green box here as well. Where would I have taken that? Would have been this bar here. Okay. So I would have targeted that out. So anybody coming here, time and price, that's it. You're out for Friday. Have a great day. And look at the comment I've made there for Friday. I've said 10:05 to 11:30 time period will be sudden moves. So we can expect some sudden moves there. And then I've got 8:50, and I've said, and might hang around there until 10:30 to closing. Now that kind of information is gold, because If you went long, okay, if you went long, because Tuesday, look, that's the low of the week. Market has not gone any lower. It comes back to retest the demand bar at a trading hour. You are going long, great. And you can hang out until 8:50 to closing. And once you've made your target at those hours, that's where you can get out. Why is this important information? Because if you're in the trade, you don't want to leave the trade early. If you're in the game, you can cover the trade at 19,477 and say to yourself, you know what, I'm just going to push the stop up a little bit and that's it. And I'm just going to let it run because I've got time until 8:50 to closing. All right, so this is how beautiful timing can really help you out. Okay, Monday I didn't have a swing day for this. Let's take a look what I had for Monday. Did I have SP 500 or anything? I don't think so. Let's see. So gold, SP 500 was Wednesday, Friday. Dow Jones, Tuesday, Wednesday. So that's how it is. See, Tuesday, low of the week for NASDAQ. If you bought the lows at the trading hour and the technical price, bingo trade. Let's take a look at Dow Jones. Let's take a look at Dow Jones. Now indices normally go together, but sometimes they do have differing days, and it's good to pay attention to that. So now I've got Tuesday, Wednesday for Dow Jones, which means I've got to look out for both days. Okay, looking out for both days, we're either going to have like a level where we can turn around from, okay, or we're going to be like, it could be like a flow through, and we'll need to, obviously this is why we're doing technical analysis. When that flow through happens, you got to wait for the price. Okay, so now look, that's Friday. We had Tuesday, Wednesday. You see Tuesday market pushes down, and Wednesday, that's your Wednesday. So Tuesday, Wednesday, we're down. Now the market makes a target. You can see that, right? Okay, so without a target, not much to talk about. Okay, so we need to come to a target. So it wasn't at a target, nothing to do. You didn't have to trade it. Okay, and all you had to do is wait for a target. Now on Thursday, look what happened. 40,708. It's also a PST right on the line here. Okay, it just bounces off the line. Now this line got integrated after this bar finished. Why? Because it will change, because it's daily, right? PST will adjust to itself daily. The weekly will adjust weekly. We are never going to have repainting prices. So once the week opens up here, that's it. You know, that's the price for the week. And you can see I had this HCL1 41047. 41047 is right there. So this was a target for us, okay, and it did it on Wednesday. All right, and look at the timing on Wednesday. Just bang, all the way into that target. So once that target is done, this is not a trading hour. If this was a trading hour, let's take a look at what happened on Wednesday. Wednesday, 225, 430. Let's see. This is your 430, because I don't recall having anything at that hour there, did I? Wednesday, nope. I had 430 to 505. Okay, so I didn't have anything here. So despite the fact that we hit a target, now once you hit a weekly target, you're not going to be looking at it. You're going to say, okay, this is the place where we take profit, because it's a weekly PST. We can expect a reaction, okay, and this is the reaction coming in. Okay, so that's you've done a target. Wednesday is a swing day, yes, but we are not at a swing hour. Okay, not to mention, if we're not at a swing hour, once we've done the price, it's a bit tricky. If you had gone long on a weekly PST here, okay, I would not say that's a bad idea, okay, because once we're on a target, that's it. For me, it's on a weekly PST is good. But you also want to check your monthly, because this is a breakdown on the monthly. I said to myself, we still have a bit of room to come down. I in fact mentioned that in the video as well. So the market then comes in on Wednesday as well. As you can see, we don't have much to trade on the Dow Jones. Okay, nothing really to trade. These were the hours for Friday. Market goes up. New York sweeps them open. Okay, so if you did get stopped out on this trade, that would have been a very tight stop loss, because if you enter the trade here, your stop loss is going to be just under that bar, and that would have been just unfortunate. Sometimes it happens, but you need to understand it's a good it's a good thing that we came across it. Any stop out here was just so tight that it wouldn't really hurt you at all. Let's take a look at the others: gold, euro dollar, and SP 500. Obviously, checking the swing days out for the future is also going to be really important, because, for example, we're on a swing day yesterday with Bitcoin, right? So I definitely want to know what's the next swing day for the next week and so on, because if I'm entering a trade, I want to kind of use that as a measuring tool. Are we going to get there? Am I expecting the market to fall into that next swing day or not? Okay, let's check it out. All right, so let's check it out. Let's take a look at gold. Now with gold, remember we had Monday, we had Friday. Now look at this. I said on a Monday, you can sell the high and buy the low. Why? Because if we come to the weekly PST, 65.52, 2884, 2884, 2884 at a trading hour, right on the dot at 2884 on a trading hour, and 2880 was on the day actually for Monday. It was on the daily PST. Okay, obviously the daily PST setup changes. The daily changes daily, weekly changes weekly, monthly changes monthly. The intraday will change according to whatever time frame you're using. So on a weekly PST, all right, we've come to the price. It's a swing day. It's a swing day, all right? And it's a swing hour. And it's the closing. Asia dips down and just pushes up. And there is no looking back. So nice and easy, okay? Going where? Going all the way into the next swing day off this last Friday. So Monday to Friday. Now, this is why, if you watch the videos, is why I said, guys, when every time we have a pullback at a trading hour, you got to push up. Pullback, trading hour, push up. Wednesday, I said 4:30 to 5 o'clock was a great time to trade. It really looked good, and the market just blasted out nice and easy. Same again, Thursday, coming into the trading hours, opening price retest. Again here, going all the way up into our targets. Now 2987 was a target. Okay, as you can see, 70, 2988. On the weekly, we still got room to go, but on the price as well, you can see it made that 3002 and just slightly above it pushed down. So there's nothing to do on Friday for gold. You just ride it up, and that's it from Monday to Friday. If you watch previous videos as well, you'll see how swing day to swing day you can just ride it. And our technical analysis, as you can see, it's not very complicated. All I've got here is a few lines, and the arrows are the swing days. Okay, so I'm just pointing out to myself what I would be doing with time and price, and that's it. I've got one indicator which gives me the price on a daily, weekly, monthly, intraday, depending on the time you're trading. It gives me the targets. That's it. That's it. Let's take a look at euro dollar. Now with the euro dollar, let's see what the swing days were. Here we are, Tuesday and Friday. So that's your Tuesday. Now remember, if you watch the video as well, I said this is a sell zone anyway. So sell zone Tuesday, great. Then you can sell afterwards. Once it's done the hours, let's take a look at the Tuesday hours. Look, this is Tuesday. Market is making high going, as you can see. If you sold here, you would have covered the trade here again. If you sold here as well, let's say you sold here for the sake of argument. What's that? 1.0925 to 46. That's too much of a stop loss. Okay. So what would you have done here? Well, you needed to wait for a signal, or you need to check if that was your zone. All right, so that's your Tuesday. Now, on your daily, that's your high. Stop sweep is anticipated. All right, if you don't take technical analysis, stop sweep from the high, closing below, next day sell. At what hour do they sell the next day? Let's check it out. Tuesday was the swing day. Wednesday, we've got an hour here. Now on Wednesday, look, this is nice. This is a good example. On the videos for Wednesday, if you take a look at the videos, I said, guys, we need to sell, and we need to sell in this bar. Okay, once the price gets here. So that was a technical level for us with a stop sweep possibility here. But as you can see, the market came up there, and we didn't have an hour. It came up, sold, it came up, sold, it came up, sold, and I had no trading hours there at all. So what do? You do nothing. Okay, you trade something else where price and time match. Okay, but this was a technical hour. Tuesday was a swing day, so I did say Wednesday, Thursday, if you want to sell the highs, I'm okay with it, because we're going after a swing day. Okay, now the next following day is Thursday. Now once the market has been selling, now look at the trading hours, the market's just selling. Trading hour, selling. Coming into the target, 1.0833. Where's that from? That's from right there. Now this line was established when that bar was over. So on Wednesday, okay, Wednesday we could already trade the breakout down, push it into a target, 66, being 1.0834, 1.0834. Now if you recall, Friday is a swing day. What does that mean? Well, we came 2 days down. So Friday, looking for a buy from a target or a price level on a PST basically at a trading hour, not a bad idea, right? And that's it. Time, price, you're in the game. Boom, going all the way up into there, nice and easy. Really, I mean, I say nice and easy, it's just time and price. If they match, great. If they don't, let it go. Okay. Let's take a look at SP500. SP500. Now look, on the SP500, we had swing day, Wednesday, Friday. This is Wednesday. Now you can see the market's crashing down. Let me get rid of this. Okay. When the market is crashing down like this, and you know it's a swing day on a Wednesday and a Friday, you're going to think twice before wanting to sell at lows. So down here, going into a breakout trade is the silly thing to do. Why? Because it's a swing day. It means that we're going to either go up to sell again, or we're going to start going up. See what I mean? So, I hope you see what I mean. So understanding if we've come down to a level, and I drew this line ages ago because, you know, we need to work with technical analysis. You see on the monthly, we've got room to go down on our PST still, but look at this. 5,505. Oops, where are we? We need to get into 5,505. 5,500. How precise? 5,505. How precise is that, ladies and gentlemen? And that's your trading hour. Okay. Now with the swing days being Wednesday and Friday. Okay. Wednesday, the market, as you can see, is going sideways. But on Wednesday, we didn't have an hour to buy at the low. We didn't. So you don't. Okay, you just don't. Right? Wednesday, if you thought about selling the high, you could have. Why? Because we marked in the level, and that's a trade hour. Boom. Why? Because the market's still going down, right? If you wanted to sell down, you could have. Not a problem. Because the market closed gap right at the trading hour. And this is where everybody is confused. Everybody's confused. They're like, what the heck's going on here? All right, nothing to be confused about. It's your trading hour. Boom, selling it down. Now, like I said, it's a swing day, but we didn't have a low spot. As you can see, we didn't have an hour. So there's nothing to trade if you don't have an hour in price. Come Friday, come Thursday, you see Thursday we make a monthly price level, and it's a swing hour. So Friday, market's just going with it. It's coming into the targets at the right time. Okay, if you take a look at the daily, 31 was a target, 5,610. So 5,610 is there. Now look at that comment I made again on Friday. I said 850 is there, okay, as a target, and might hang around there until 10:30 closing. That's your 850, and that's your 10:30 closing. It's just hanging around here. So anybody who entered the trade nice and easy just had to wait for the hours and the time. You could have gotten out on a PST target, no problem, or you could have pushed your stop up and just, hung around here and then said, you know what, I'm getting out 10:30, I'm just getting out, market's closing anyway. Knowing those hours is just, I don't know how to explain it. It's just like a lot, okay? And nobody's doing that either. So timing is great. Like I said before, it doesn't really matter what technical analysis you use, because all methods of technical analysis is going to work somewhere, somehow. At the Global Trader Club, we have a very practical approach to technical analysis, and it covers everything, but it covers everything from a very pragmatic point of view. So when we're doing waves, we're not counting the Elliott waves until God knows what wave you're going into, because that's going to just drive you insane. It's just going to drive you crazy. But if you understand the basic structure, and if you understand what to look for, this is why I bundle it up with a few other techniques, and it's very, very easy. All you got to do is just draw your lines in, and that's it. Then you match a day, you match a price, you match an hour. It's a bingo trade. I hope I've done enough demonstration here. This could be done for anything. The reason I took a look at these is simply because these are the ones I work the swing days for, as you can see. So these are what I'm expecting, but hopefully once we move into the fintech zone and we get our software developed, hopefully, if we get more members, like I said, this is why I'm now opening up on YouTube, because the more members we can actually have, we can start pumping into getting the software development, and I can also start talking about it with people, because we have users. All right, so this is not a YouTube channel to kind of like it is to sell services, but the vision is to build it into a fintech where we've got the software, and the mission is that mid-level where I'm using all this system as a kind of a raising funds kind of a tool. So that's the whole idea. I hope it makes sense. This is what the consultants have told me. I'm not a fintech guru or a venture capital guru, but if we can, because the vision is good, the application is good, we can see it works, and the only thing missing is the mission, and the mission is to kind of like raise funds so we can channel it and we can actually induce investors to kind of speed up the process. Okay, I hope you guys have a good week ahead. If you're in the members area, you already have all the week. And like I said, I'm working on April, and we'll nail that soon, hopefully too, in the next coming few days. If you have any queries or any questions, feel free to reach out on our contacts page at globaltrader.club. More than happy to answer any queries and questions. And thanks for your comments, because some of you made some intelligent comments where I needed to clarify things a little bit more, and that's always useful for all of us.